Welcome back to Real Vision. I'm Ash Bennington. It's been a great week in markets and a great week in guests. Today, we're joined by another crowd favorite, Mish Schneider, Chief Strategist at MarketGauge. Mish, welcome back to the show.
Thank you so much. It's really great to be here.
Mish, we were joking around before we got started here. It's always fun to do these when we're in a rally. Let's talk a little bit about big picture, what's going on. How do you see what's happening right now in markets?
Well, it seems to me that I never was in the recession camp, so that certainly doesn't look like it's happening with latest stats that came out today. Certainly the jobless claims are showing we still have a robust labor market, even though unemployment had ticked up. The retail sales are showing the consumer is not dead. Although we can talk about that later, I think their spending habits will continue to change. In terms of the economy itself, I don't really necessarily say we're going into a period of growth. So what if you're not going to go into a recession and you're not going to go into growth, what does that leave? And that to me, I'm still in the stagflation camp, not the most popular opinion, but I'm used to that. Having not always the most popular opinion, but also being ahead of the curve. And if you think about it, right, Ash, if we're having a stagnating economy, and even though everybody's been cheering CPI, PPI, oh yeah, inflation's over, blah, 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 the Fed has not been so quick to do anything because they're not convinced, nor am I, and mainly because of all the reasons that we all have talked about over and over again, not to mention the geopolitical situation, but the increasing stress on raw materials for AI and data centers, supply chain and the freighting costs still very, very much up, the debt of the government not going away anytime soon, nor the government spending. And all these things I think are keeping certain commodities very elevated while others aren't in the picture. So it depends where you want to look. That equals to me stagflation.
All right, Mish, let's talk about that. Let me ask you this. Obviously, as you alluded to there, pretty good couple of days in terms of CPI, in terms of retail sales numbers, good prints. So let me ask you this. What does the stagflationary scenario look like in your view? What might we see if this thesis play out on a 3, 6, 12-month time horizon?
Well, in the next few months, obviously, we're going into an election. And so it's going to be so much up to the Fed, I think, in terms of how accelerated we might see more of the inflation part, and also whether or not we go from stagnation into any kind of economic growth. And that's what makes stagflation so compelling to me, because if the Fed lowers too aggressively, then we know, number one, they're worried about the economy. And number two, that would be a sign to commodities that there is an easing of the interest rates for commodities to go up even higher. Now, only thing that changes that, of course, would be an out and out recession. And like I just said, I'm not seeing that on the horizon, but I will say that after 3 months, 6 months, depending on what's going on, not just with everything we talked about, but the new administration and how they either put pressure on the Fed, depending on who wins or not. And then if the Fed continues to lower, as many predict, into 2025, we could go from stagflation into more of a recession down the road. But I would say that that's a premature call. So for now, I think that we still are going to see a good rally in certain commodities, and that we are more ranging for the equities. We just proved that technology is going to stay firm when it corrects, especially to a major moving average like it did with the semiconductors in particular that went right down to the 50-week. The rest of the modern family is participating, but not necessarily showing us any great signs of economic growth. So I think we'll range, and we have to keep watching certain commodities like silver and copper and gold and oil and maybe some of the other natural gas and tin and aluminum, things that are more related to the development of AI.
So, Mish, you set that up beautifully in terms of framing the thesis. We're going to take a look at some charts in just a second. But let me put this out there since you mentioned the Fed, just to frame up the context of what we're talking about right now. Current target range, 525 to 550. If you look at the futures market, I'm looking right now at the Atlanta Fed expected 3-month average SOFR path, price down, let's see, on camera head math, about 220 basis points when you go out to 24 months. Talk a little bit about the way you see that and what it means for people who don't follow these markets as closely as you do.
Well, people have been asking me, should I be buying more tech? And let's start with that because that's the cult, right? That's been the cult, NVIDIA cult. And we know we haven't reported earnings there yet. But I think it's a good representation because, first of all, we have all the billionaires selling tech up here, right? We just had great reports coming out from Buffett, from Ackman, from Druckenmiller. All of them have severely, if not completely, gotten out of their Apple, their NVIDIA. I'm not sure if they're in Google. I can't tell you every single one, but those two in particular, which I think are good representation. So you have to say why, right? And I think both of them, what that represents to me is exactly what we see here, which is that the AI run, we don't know valuations really, because the costs and all these calls, by the way, in terms of guidance, the CEOs themselves said that costs are going up down the road because of the cost of raw materials, number one, and just in terms of keeping up with research and development and really constantly staying ahead of the competition costs money, right? So that's, I think if you're looking at investments right now, those things, maybe we see a little pop here and there, but do I think they're going to continue to scream and leave the market as we're going into the end of 2024, 2025? No. So where does the Fed fit into that? Again, at this point, all these anticipations of these huge cuts may not necessarily be the best thing for the market, but if they do that, I don't think it will necessarily help those companies, but that's where people are looking at value stocks and thinking that some of these companies that have really suffered because of high interest rates for so long might do better, especially since we have 40% of the small cap companies have been on near 52-week lows, might get a pop. So I think you have to look for rotation. And if the rotation doesn't happen, you have to ask why. Was the Fed too late? If they're too aggressive, are they worried? And if they're not aggressive enough in terms of lowering rates, how many more of those companies will just go by the wayside as we're starting to see even more mergers and acquisitions of the companies that can really stand to withstand higher interest rate environment for longer. So it's so nuanced. I guess if I wanted to put it in plain English, I would say that because of the factors I mentioned in the very beginning, I think your best opportunities right now are still commodities, certain commodities, not all. And I would even say we could look at DBA and some of the agriculturals that have been so beaten up, how much lower can they go? But like copper, for example, people were like, oh, Dr. Copper, we're going into recession. All it did was go back down to where it broke out from in 2023 or 2022, 2023. And I think that's it. That's what I think. I think you have to really think right now that the Fed is stuck. They can't raise. They're not ever going to do that for a long, long time unless, obviously we go into some kind of other situation. I can't even imagine what that would be to get them to raise. I don't even want to think about it. They can lower, but they're going to goose inflation. And it may not necessarily help the companies that have struggled. And the tech is going to have to deal with the higher costs of commodities. Does that kind of clear things up?
Yeah, and it's interesting that you should mention that. Talking about getting a pop right here, markets in motion. Right now, Nasdaq's catching a bid up 5% trailing 12 days. And to your point, Dow Jones Industrial Average up less than two and a half, less than half that trailing 5 days. So there you have it.
Right. And yeah, let's talk about NASDAQ for a second here. But with all of this, it still hasn't cleared the 50-day moving average, or it's sitting right there. So it's possible that the big bounce that we had could be turning over for next week. I mean, we have to really watch, or at least in NASDAQ. Now, remember, a few weeks ago, semiconductors started selling off even before the small caps did. That's why everybody thought, oh, the great rotation into value, small caps, technology is taking a pause. Here we go. And then that changed this week as everybody said, oh, this is the dip to buy in technology and let's get out of the small caps. And now here we are with the small caps still really, really not anywhere near where they were at their peak a few weeks ago. IWM was trading up at 227. It's just now struggling to get over 210. while Qs are right up to resistance. So that's where we start to look at the internal sectors. And that's the two charts you mentioned that we were going to take a look at.
Well, let's bring them up. Market's certainly keeping us awake today.
Yeah, well, I think the first one you might have up there is the transportation. Okay, so this is a weekly chart. And I have found, by the way, the weekly charts have been the most reliable charts if you really want to kind of step back and have a point of view outside of being a very active trader. And so what do you see here? First of all, transportation had peaked earlier in the year. And while S&P and NASDAQ continued to make new highs well up into April, this thing was starting to actually sell off into April. So that was kind of my first sign that the economy was slowing. And yet the Fed at this point still wasn't talking about doing anything. It was just sort of maintain the course. And yet transportation hasn't exactly dumped, but it has been underperforming the SPY for quite some time. And for the economy to really show legs, you have to have a transportation sector. I don't want to get old Charles Dow on everybody because it's old school. But as far as I know, we still have to move things through freight, mainly, and through air. And if that's not participating, what does that mean? Now, look what happened, though, 2 weeks ago. We went right down to the 200 week. It looked like we were really going to fail. And then when the market, after that whole Japanese yen carry trade thing happened in the $1,000 day, this thing actually held the 200 week. And now today, as we're talking with all the good news, it's back over the 50 week. But is this anywhere near the highs? No. So all this tells me right now is we're seeing A, a good technical bounce, B, maybe the start of something bigger, but C, the jury's still out on that.
You can't go wrong going old school on Real Vision. We love that.
You know, I'm old school and it's been pretty good for me so far.
All right, second chart.
We have a few new tricks. You know, we could talk about Bitcoin and I'm sure we will.
Shall we pull up the second chart?
Yes, let's do that. Okay, so this is granny retail. I mean, I think the Real Vision audience has heard my economic mind family enough through the years, considering I started with you all in 2018. And so I don't feel I need to discuss why granny retail is called granny, and other than to suffice to say that it's 70% of the GDP. And again, maybe a bit old school. The consumer has to participate in the economy. And with the retail sales, look what happened. First of all, again, this thing peaked out. It tried to get back up in May when the market was going up, but it didn't sustain there. It created almost a double top, but it didn't necessarily follow through because last week, once again, that down day brought it right to the 50-week moving average. And now, of course, today, it like closed yesterday right on it, the 200-week, which is the green line, and today it's popping above. So it's almost exactly the same thing we said about IYT, the transportation. And these two will work together, right? Because if the consumer's out shopping, everything has to be delivered. And we're not doing drone deliveries yet, so we still have to assume that it's going to be delivered to you through FedEx or UPS, which of course has been that it's been flown or freighted there. I mean, that's why they work so well together. Again, same conclusion. It was a good buy the dip. If it's going to get higher now, it has to hold the lows of actually what we're seeing right here today at around that 73.50 level, the 200-week. And yet it still has to prove it's got some legs and get through 80 in order for us to get very excited about some kind of a real shift in the U.S. economy, which of course would also probably mean that the Fed won't do very much or 0.25% won't do very much and they won't get much more aggressive than that.
Mish, we've got some questions coming in that I definitely want to get to in just a second here. But since you mentioned it, since we've been talking about transportation and retail, let's get new school for a minute and talk about Bitcoin since it's hovering around the 59,000 mark. And I am always interested in all things Bitcoin, down on the month, up on the year. Talk a little bit about how you see price action in Bitcoin right now.
Well, you know, of course, we had the big halving that this year, and Holden, who was our crypto guy, but he has gone on to other things. So he's not with our company anymore, but I still talk to him all the time. And
Is he full-time crypto now? Has he
Hmm?
has he like has he aped in? Is he full-time crypto now?
No, no, actually, believe it or not, he went into commercial real estate, which in
Well,
Santa Fe is a big joke because people come here from all different types of walks of life that they've had careers, and then they come to Santa Fe and they go, I found my calling in real estate. So it's kind of like a funny thing to me. But nonetheless, he's not in Santa Fe. He's up in Ohio. But he and I talk, and he's very much a crypto trader still. And he has been saying, and I agree with him 100%, that September, October, when there's a halving year, is generally when we start to see the impact of that halving and we start to see Bitcoin accelerate. And we do know from a fundamental standpoint, there's been a tremendous amount of buying all over the place, real major institutional investing in Bitcoin. And you've got to say, okay, that's certainly a mainstream situation that we didn't have. I think the SEC has kind of given up. And now with an election, we have both candidates, obviously more Trump than Harris, but we are definitely, I think she's going to join that camp, looking at support of cryptocurrency. So here's what we've got going on right now. I think that we're chopping around here. Obviously, this dip that we had on that big crazy down day to 48 didn't last very long. So I'm saying 50, 52 really needs to hold. I probably would change my mind if that broke, not necessarily to get super bearish, but I would probably want to see where the dust settles. And we're not seemingly getting over 62 and we have about four tops at 72, right? So we could just chop here. And at some point, if we can get through 62, we'll get our way closer as we get towards September, October to 72. And then, of course, if that takes out, then, these calls you've seen for 100, 150 would probably be more accurate. I'm really enjoying trading some of the other things, though, outside of Bitcoin. Number one is blockchain. I have a position in blockchain. And when Bitcoin was going down, blockchain barely moved. A lot of the miners have been so beaten up. People are saying they're probably of value, but I'm really focused on the blockchain technology because I believe that that is going to be a huge part of the future. And I'm also really enjoying trading some of the altcoins like Chainlink, for number one, which, by the way, is one of Holden's top picks. And he has been saying every time it dips, buy more, which I've been doing. And at some point, he thinks that's going to screen up tremendously. So that's what I have to say about that.
boy, that's so interesting. First, on the election, so interesting. You mentioned the way the candidates are framing this out. Obviously, Trump a little bit more Bitcoin, I mean, significantly more Bitcoin and crypto friendly than Kamala Harris at the moment. But isn't it interesting in this election cycle where if one candidate says the sky is blue, the next one comes and says, no, it's green, to have Mr. Trump come out, spec out this position at the Bitcoin conference down a couple weeks ago and have Vice President Harris come out and say, no, we're into this stuff too. I mean, that's like really interesting. That's not a dynamic we've seen.
Well, and also, I mean, so let's talk about that for a second, because I think this is something else. There
Let me,
are
let me just tee this up here real quick because we got a question and I want to just read
Oh,
this.
go ahead. Do the question. We'll come back to
exactly this. It comes from Sarah Walker, who says, hey, Team RV, great to have Mish back on. We agree completely, of course. Any implications, thoughts on crypto and risk assets would be great. Well, that's exactly what we're talking about right now.
Exactly. And right now it's been a risk off type of asset, but people are waiting for the big decoupling and maybe that comes, maybe it doesn't, but I do believe that it will come. And like I said, in terms of the blockchain, that's where BLOK, if you need the symbol, I can tell you that I'm long. I don't have a full position on yet, but I'm looking to add there. And that would actually be almost a buy and hold. And I'm not much of a passive investor, but I think that one that you can sit with because it requires some patience.
Yeah. I should also say, since you mentioned Chainlink, a quick plug, if you're a Revolution Pro crypto member, go check out my conversation with Sergey Nazarov, the founder of Chainlink Labs, on this network, obviously, so you can get a little bit more depth on that if you are interested.
Ash, what did he say? Tell me real quick.
I always enjoy these conversations with Sergey because he really is someone who has a very clear view in his mind about how the future is going to look with relation to these digital asset blockchain technologies. He's really interested in this idea of oracles. That's what Chainlink is all about, the idea of connecting off-chain data to the on-chain world. And essentially what he's talking about, and it's a really interesting conversation if you haven't seen it, is the integration of this blockchain technology with things like DTCC, things like Swift messaging, basically the things that we call the plumbing in financial services, the things that connect and allow people to move funds, move securities, move assets. Uh, Obviously, it's very, very early in the stage, we should say, and therefore quite speculative. But the reality is, it doesn't take a genius to start to connect the dots here, at least from the 50,000 foot level. Probably takes a genius to implement it, but to see, hey, look, we settle on T+1 on some of these assets. It would be really useful to settle in T plus 30 milliseconds rather than where we are today. Clearly, this technology has at least the potential, the promise of reducing costs, increasing speeds, increasing transparency, all of those types of financial plumbing issues. Sergey covers it I think, just in a really interesting way. He's got an interesting take on this. And if you're interested in Chainlink Labs, you should check it out.
Well, and a couple of things come up from what you were just saying. So I'm really glad you gave us a recap. Number one is the plumbing. That's where I started out. Basically, when you talk about commodities, you're talking about the plumbing because nothing gets done without raw materials at this point in time. Even though Kathy Wood's world, there is no more raw materials and everything is done robotically. We're not there yet. Maybe we'll be there, but I may not be around to see it. So as far as I know, plumbing is all about. So exactly what you're talking about with Chainlink. And that also brings to, and that's obviously why Holden's all excited because he would actually be much more involved with all of the stats that you just mentioned than I'm much more of a assimilator of information and I make conclusions. I don't necessarily always have the details right there, but it's served me well at this point. But the other thing to say about that comes to mind is Ripple, XRP, which I think they just settled, right, with the SEC. And I've had the HODL in Ripple, oh my God, for years already. I haven't added to it, but that's another thing to watch.
Yeah, I should, talk as we talk about these financial plumbing issues, for those of us who have a few gray hairs who've been watching markets for a long time, and I realize this is like 15 years ago, so not everybody watching this show may remember it. But what happened in the 2008 financial crisis, 2008, 2009, and that vintage, the things that we saw were essentially you had markets begin to shut down because nobody knew what anybody else was holding, asset-backed securities and a whole bunch of other risk asset classes. Because you couldn't settle these things quickly, there wasn't transparency. Gosh, what an opportunity for new technology to come and assist potentially in the future.
Right, exactly. So let's pivot back to the election because and rather than look at the differences, I am all about looking at the similarities because those are almost the guaranteed trades as far as I can see. So we mentioned obviously cryptocurrency, and I think the writing's on the wall there. I also think that cannabis is another area to look at. I don't think it matters whether it's Kamala or Trump that becomes president. I think it is absolutely inevitable, in fact, almost 100% guaranteed that we will see a rescheduling of cannabis. And at some point, not only the rescheduling, but we'll also see the federal government legalize it or at least allow the interbanking among states to happen. Both candidates are pro that. And I don't know if Trump has been against it in the past, but J.D. Vance was very much for it. And now he's starting to talk more pro legalization. It's not so bad for you. People shouldn't go to jail for it, is basically what he has said. In terms of alt energy and EVs, one would think, oh, Trump is all drill, baby, drill, and Harris would be all EV and alternative energy. But yet I actually listened, not to the whole thing, but I did listen to Trump and Elon Musk. And again, to use your words, Ash, it doesn't take a genius to figure out that Trump likes to follow the money. And with Elon as a big supporter, he did come out and say in that interview, yeah, I think Tesla's a great car. I think that we have electricity demand is going to double, which I thought, wow, that's really astute because he's right about that. We've all been saying that. And two is that it's going to mean that we're going to have to look at some alternative energy as well as oil and gas. And clearly that's probably a pragmatic stance. And I'm sure Harris is on that same page. And then the other thing that may have nothing to do with either candidate, I think a real big trend, and I want to make sure we talk about it before my time is up, is the domino effect of the obesity drugs. So I guess the reason why I'm going on this tirade here is because I want to leave people before we run out of time trading and investing ideas that I think will be good no matter what happens with the economy. I mean, obviously a major recession would put a damper on everything, but short of that. So we talked about so far, obviously blockchain. We talked about cannabis, so MSOS has been undervalued, and anything happens, that thing will fly. And the EV space, I obviously Tesla is one thing, but I've also been looking at Rivian. I have a starter I'm looking to add. Once that gets over back, let's say between $14.5, $15 a share. In terms of solar energy, TAN has been beaten to a pulp. And every time it gets down around 40, it finds some buying. Every time it gets up to about 45, it gets some selling. So there's your range. You want to get out of that range. And now let's go back to the conversation about obesity drugs, because I like to leave actionable information. So a couple of weeks ago, I was on Benzinger and I talked about Ulta, right? Because I said what's going to happen is more and more people are going to turn to these drugs to lose weight. Obesity in this country obviously is a huge issue leading to heart disease, diabetes, strokes, et cetera. Now they're starting to do more and more research to show that it's reversing those conditions, especially as people lose weight, they can keep weight off, changes their lives. So what do? Now all of a sudden you've spent your entire life really hiding because you have not felt good about yourself. And now all of a sudden you feel much better, right? So you are going to maybe deal with your skin. So that's why AbbVie's done so well, because it does a lot of Botox. So cosmetic and elective surgery might be a thing, but also you're going to start to wear more makeup. And that's one of the things that I thought about with Ulta. So I put Ulta out all over the place. And guess what? Warren Buffett bought like 680,000 shares of Ulta yesterday, when it was at its lows. And it's up, tremendously today, about 14, 15% today, because he sees it. It's obvious to me that, so you've got Coty, you've got maybe New Skin. I mean, look at some of these companies that Herbalife could be another one. Think people who all of a sudden never thought about taking care of themselves. First, they'll do it externally, and then it'll eventually trickle to internally, which will mean more supplements, better food eating, and maybe even going out and hiking for the first time in their life, that kind of thing. So any stocks that have to do with that, I think would be a really good place for people to look as we're getting into 2025.
Who's that little guy wagging his tail behind you?
That's Raul, not named after Raul, although kind of close.
Here's what's so interesting to me about these mega trends, and one of the reasons that I find them always worth talking about is because I don't want to suggest that it doesn't matter who wins the election for these things, but because the rate of change, the speed or lack thereof, obviously is impacted by policy. But almost by definition, these mega trends are sort of secular trends that are rising that occur sort of no matter who gets into office. I think that's just really interesting.
Right. And that's why I'm focused on that, because it's easy to get into, well, if Trump wins, this is going to happen. This isn't going to happen. And if Harris wins, no, let's talk about where the commonality is, so that people don't have to worry about the political arena so much and just focus on trying to make some money.
There's some cable networks where you hear nothing but that, and will hear nothing but that until November.
Yeah, and network television, which I go on all the time, is filled with a couple of things that disturb me. One is, all the political ramifications that represent the fringe and not necessarily the mainstream of America. And two is the obsession, as we talked about in the very beginning, with NVIDIA and the cult following there, which may or may not be the next place to make big money. I think the areas I talked about are much bigger opportunities. I mean, let's look at Ulta. Ulta's up 15% today. NVIDIA's up what? 3%. Oh, sorry?
I just wanted to get in this one final question before we wrapped, because it's a good one, and I'd really like to get your view on it. It comes to us from Stuart Hardy. How is rising global liquidity likely to affect prices in H2 second half of 2024? How fast is the reaction function in markets? Great question, something we haven't touched on directly at liquidity. We mentioned the central bank here in the U.S., but I think he's talking about global liquidity.
Well, I think is exactly what we talked about. I mean, first of all, rising global liquidity is probably a good thing. And I don't even think it really has happened much yet. We've seen pockets of it. In fact, the last country that I saw that actually lowered rates was what? New Zealand. I mean, I wouldn't exactly call that a global representation. And in terms of the ECB right now, they haven't really, again, kind of like Fed-like, they haven't raised, but they haven't done very much in terms of raising liquidity. So it's a good thing to keep your eye on. But again, it just tells me the exact same thing, is that maybe they waited too late. And so it doesn't necessarily mean that we'll see a huge growth spurt in terms of actual industrial production and their individual economies. With consumerism. Obviously, this diet drug phase is a completely different thing, hasn't even begun to go global yet. But at the same time, it could goose inflation. And that's why I think that the stagflation environment is not just US, but something we have to look at globally as well. And even though we haven't talked about the Middle East or the Russia-Ukraine, these stories get old and people start forgetting about them. But what we're really still seeing here is that from a deglobalization standpoint, that's inflationary.
Mish, we've covered a tremendous amount of ground here. Uh, Final thoughts, key takeaways that you'd like to leave our viewers and our listeners with.
I think the best thing right now really would be to, think about what we talked about here in terms of the inside sectors. What are the small caps, the transportation and the retail sectors going to do going forward? Was this the start of a bigger run? In which case you have to ask yourself, if the Fed is convinced that the economy is okay, do they do a token but don't exactly depend on them for all these different rate cuts? And maybe that's a good thing, which would put soft landing. But if they don't, on the table, by the way, but if they don't do that, if these inside sectors cannot follow through from here and just sort of chop around, what does that mean? And if the Fed gets more aggressive, what does that mean for inflation, which of course you're being told has gone away? But we all know anyone who goes shopping knows that that's not necessarily the case. And anybody who's looking at the demand on raw materials for the growth economy that we have in tech knows that we're going to need more of them, not less. So that stagflation environment needs to work itself out. And I think that's kind of my final thought, other than, obviously these mega trends that seem to be on their own fumes.
Mish, great conversation, as it always is when you join us here at Real Vision. Here's my final thought. Mish is part of our marketplace, so RV members can get exclusive discounts right now on Mish's independent research services right here. That's realvision.com/Mish, realvision.com/MISH. Mish, always a pleasure when you join us. And if people are interested, please go up, take a look at the independent research. We always appreciate it when you join us.
Thank you so much, Ash. It's always fun to come on Real Vision. I love you guys.
Great conversation. Thanks for watching. Thanks for listening. See you soon.